Hey guys, this is Vic from Grasping the Market. Welcome to our morning briefing. It is Tuesday, May 7, 2019, 6:12 a.m. So let's get cracking. Change starts to become visible on the longer time frame, as for the first time in 6 weeks, the previous week low is taken. The monthly remains pretty much the same, with no excess at the top and relatively close to the all-time highs. But now we're starting to see some change on the weekly. On the daily, the market trades within a wide balancing range delimited by the 2894 and the all-time highs. Both edges have evidence of short-term money reacting, so we need to be a little bit patient. Zooming into the market profile, the market seems to have gotten a little bit too short overnight Sunday after the trade talks headlines hit the wires, because yesterday morning when we opened, we immediately drove higher and the 2900 area was rejected. So we pushed up and stay around the 2918 area for a while. Late in the session, though, we had a secondary move, which pushed to the highs where we settled and closed the gap. Now, here's the important thing. Although the market appears bullish, the early profile shape, this one over here, if we split the two profiles, the early profile shape suggests that this move was liquidation. Because we just liquidation, by liquidation I mean short covering. They had to close short positions because the market was too short. So you see an immediate jump but no follow through. Later in the session you had a secondary move, and here's the focus for this morning. What we need to find out is if this secondary move will be accepted or rejected by the market. We've seen more headlines hitting the wires overnight, causing the overnight to trade back within this cluster over here. So we need to be careful because we will open around the middle of yesterday's range, which was really high. So the odds are for a rotational day with a very choppy environment. So what we need to assess is change versus yesterday afternoon. Definitely trading back within the lower distribution will denote change, but being in the middle of the profile and in the middle of this wide balancing range makes difficult to make an assessment on what could happen. So I suggest we are a bit patient today, but definitely keep in your radar that trading back below is change versus the late move, and this move in the early session suggested liquidation. Normally, when liquidation happens, covering happens, after the covering is done, the market normally resumes the trend. And you know that the short-term trend for the last few days have been going lower and lower and lower, and now we are around this key 2900 area. So make your analysis, be patient, and remember, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.